Hello and welcome. I'm Manesh Samtani, editor at Regulation Asia. A really interesting panel on fraud and cybercrime before this, as well as shell companies. Right after that, I suppose the shell companies discussion ties nicely into what we'll be discussing next, which is sanctions and sort of the trade bans, the related data and technology challenges, and so on. And sort of it comes at a time when the world has now been watching the situation in Ukraine for more than 2 months. The deployment of sanctions and trade restrictions have been among the key measures taken across jurisdictions to try and stop the war. Now, in this panel, we'll focus our discussion on how the financial industry is sort of adapting to comply with all of these sanctions. So to kind of just kick things off, I'd like to introduce our panelists. So first off, we have Ola Fundowicz, Director and Regional Head of Sanctions for Asia Pacific at MUFG. Ola's areas of expertise include sanctions compliance, name screening, AML, CTF, risk assessment, control. And I know, Ola, prior to joining MUFG, I think about 4 years ago, you were also at Citi in various AML and sanctions related roles. So welcome, Ola.
Thank you.
Next, we have Tung Lee, Senior Policy Advisor for APAC at Elliptic. So Tung Lee engages with regulators and firms on issues related to cryptocurrencies and other digital assets. He spent most of his career in Singapore's public sector, including roles at MAS, at the police force, the Casino Regulatory Authority, and certainly now I understand a big focus for you is sanctions evasion. Welcome, Tung Lee. I think you're on mute, but I caught what you were saying. And finally, we have Vincent Gaudel, a financial crime compliance expert at LexisNexis Risk Solutions. So Vincent has extensive experience in sanctions compliance, AML regulations, and he's the author of Solutions Sanctions Pulse, a recurring in-depth evaluation on the global sanctions landscape, I believe published on LexisNexis website. So welcome, Vincent.
Thanks, Manesh. Happy to be here.
Thanks so much for joining us. I'd like to sort of jump straight into the discussion, Vincent, by asking you maybe to give us an overview of the current sanctions landscape and sort of if you could speak to the current levels of complexity given sort of the measures that have been announced over the last 2 months in response to the situation in Ukraine.
Sure. Thanks, Manesh. Yeah, I'd be happy to kind of set the stage to start. So I think sanctions have been complex and have been an area of challenges for quite some years now. But in the recent, let's say in the past 2 months, I think it's fair to say that financial institutions and global companies are faced with an unprecedented sanctions compliance challenge. And basically, the challenges that we have seen unfolding in the last couple of years have really taken place in the last few months. So let me explain. Let me exemplify. First and foremost, we have seen for the last couple of years the sanctions list growing in size. There was a report issued by the U.S. Treasury end of last year that showed that basically over the past 20 years, the U.S. sanctions list had grown tenfold, and the figures were that the U.S. list was roughly 10,000 sanctioned entities at the end of 2021. Well, I think it's fair to say, and every bank on this call will have seen the designations of Russian entities expanding the list of designated targets. And if to give you a rough count, over by the end of the first quarter, by the end of March, Russian-related designations by just 3 regulators, by just the US, UK, and EU, was roughly 2,300 added designation to those lists. So we have seen the expansion of lists taking a very rapid pace with Russian sanctions this first quarter of the year. The second operational challenge and the second important thing to have in mind when talking about sanctions challenges is the speed of change and the speed at which regulators update their lists and constantly adjust the targets to their sanctions. And again, it has been true in the past couple of years. But over this first quarter of the year with Russian sanctions, we have seen sanctions list changing almost on a daily basis, and sometimes actually several times in the same day. And finally, I think it's also important to have in mind that sanctions in and on them in themselves are becoming increasingly complex. It's no longer just traditional asset freezing measures all the time. We obviously see those continuing to be applied, but it's also now about regulators putting together some more tailored financial and trade restrictions, some specific activities that are being restricted, and well, as a result, it's really a compliance headache for teams to exactly know what to do in relation to a particular target. It's not automatically an asset freeze, and you really have to look at the actual measures being applied to an entity to remediate the alerts and to comply with the restrictions.
Thank you, Vincent. And I know that was probably a difficult question given how much has happened in the last few months. Ola, maybe I can turn to you. For banks, obviously sanctions compliance is not something that's new. But as somebody who's been dealing with it day to day, is there anything you see about this, I guess the last 2 months of sanctions, that's maybe different from what you've seen historically? Are there any lessons you think we should learn from the Russia-related sanctions? And sort of how are banks really addressing, kind of what Vincent has mentioned, growing complexity, more names to keep track of, and the speed of change?
Well, I couldn't agree more with Vincent as for the dynamics of the changes recently and the designations even within a few hours. What we've observed recently in the last 2 months is quite an unprecedented, because the trigger for those sanctions is quite an unprecedented. So those changes, the sanctions keep expanding, and the banks have to keep adjusting in real time. It poses a challenge to both compliance teams, because they have to keep track of all the changes, ensure the smooth communication within the banks on the expectations and process changes. It also poses certain operational risk, because naturally more entities that are subject to screening produce more alerts that have to be reviewed timely. So operational risk also has to be mitigated. One other thing that is quite, I don't want to say unique, but maybe more stress is put on it, is detection of sanctions evasion that has been placed by regulators more or less in the same group as sanctions themselves, right? So the banks also have not only have to detect the risk in real time, but they also have to detect attempts of evading sanctions in a more post-transaction monitoring area.
Tung Lee, what do you see in the crypto sector? I mean, we've all read reports about the use of crypto for sanctions evasion. How grounded in reality is this? Is Russia using crypto to evade sanctions, and if so, how?
Thanks, Manesh. I think, as my fellow panelists have pointed out, these sanctions against Russia are indeed quite unprecedented in terms of scope, the speed, and as well as the size of all these sanctions. So, and as we pointed out, all of us have seen many media reports on the potential use of crypto assets by Russia to evade sanctions. But I think, as a form of context, it is helpful to consider the size of the Russian economy. So Russia's banking sector assets are estimated at about US $1.4 trillion. Its annual imports and exports, combined, are estimated at about $750 billion. And in comparison, the total market cap for all crypto assets in the world is only US $2 trillion. So basically, if you look just at the numbers, it is basically impossible for Russia to evade sanctions purely through crypto, as there's just not enough crypto assets in the world for Russia to mitigate any disruption to its economy entirely. That said, it is definitely possible for Russia to try, at least, to engage in some kind of evasion activities via crypto. And this is actually done quite similar to other sanction actors or states that we have seen in the past, especially if the situation in Ukraine is prolonged and the sanctions continue. So I think for us at Elliptic, we see three main ways that Russia may use crypto to evade sanctions. So first, there is the use of crypto mining, which we have seen Iran use in the past. So Bitcoin mining, for example, is an energy-intensive activity that generates Bitcoin for miners as rewards for validating transactions on the blockchain. So Iranian-based miners can actually use crypto mining to generate Bitcoin, which can then be used to pay for imports, bypassing sanctions imposed on Iranian financial institutions. So in effect, crypto mining actually allows Iran to monetize a portion of its energy exports that cannot move freely anymore in the international markets due largely to US sanctions. And in the past couple of years, the Iranian government has basically gone further in. They have implemented a licensing regime for crypto miners who want to set up shop in the country. And this allows the government to, again, increase its revenue through licensing fees, taxation on such crypto mining activities. So I think like Iran, Russia is actually well positioned to leverage crypto mining to generate revenue. In fact, Putin himself mentioned this earlier this year by saying that Russia is well placed to take part in the crypto mining in the world. And then prior to this war, it is actually estimated that about 11% of the entire Bitcoin hash rate of the mining rate in the world is generated by Russian-based crypto miners. So to put it into perspective again versus Iran, this is actually almost 3 times that of Iran. So while most of these crypto miners in Russia are currently set up by Western companies, but the capability is definitely there for sanctioned actors to basically take control of these Western assets, especially given the war footing, to nationalize these assets and then generate Bitcoin and evade sanctions by the government. So another potential mechanism, I think, for Russia to evade sanctions is actually through the use of cybercrime, such as ransomware. And we've definitely seen other sanctioned states like North Korea use this very successfully in the past. They have definitely taken part in sophisticated hacks that allow North Korean cyber criminals to successfully steal hundreds of millions of crypto from various crypto exchanges previously. And they were also actually successful for a long time because crypto exchanges at that time did not focus on cybersecurity. Like North Korea, Russia is also very well known for its cyber capability. I think just yesterday, Microsoft put out a report that said that I think about at least 6 Kremlin-linked Russian-based hacking groups were responsible for almost 240 attacks on Ukrainian public infrastructure and facilities. So this is an example of how Russia is actually well placed, again, to use its cyber capabilities to perhaps steal funds from crypto exchanges if it wants to. And then we have also many other examples. So for example, the infamous Colonial pipeline attack of 2021 is also attributed to Russian ransomware. Hydra, one of the largest Russian language darknet marketplaces in the world, was also thriving until it was shut down by German police just last month. So in all, the possibility of state-sponsored cyber activities by Russia is definitely there. And it is, I think, it's definitely a concern for many governments in the world. And then I think lastly, for any Russia sanctioned individuals or entities or even the government to use crypto successfully, I think one critical element that many people may have forgotten is the use of non-compliant or even complicit services in order to off-ramp the crypto transactions. Because of course, again, Bitcoin will only be useful if you can convert it to actual funds, for payments and so on. So we have seen instances of such non-compliant crypto exchanges helping Russian criminals in particular to launder large amounts of money. So for example, there were 2 crypto exchanges that was actually based in Eastern Europe, Swax and Chartex. They were actually placed on OFAC's sanction list last year for almost exclusively facilitating hundreds of millions of dollars worth of ransomware transactions by Russian cyber criminals who successfully then converted these crypto from victims into rubles by using these 2 exchanges. So potentially we can really see many sanctioned actors employ these same services to move funds out of sanctioned Russian banks by converting them into crypto and then off-ramping these said crypto into fiat currency in defiance of global sanctions. It is definitely possible for Russian government themselves to attempt to leverage existing financial links with similar unsanctioned, smaller financial institutions and crypto exchanges to evade sanctions. And which all of these techniques, right, could actually undermine the effectiveness of sanctions to a certain extent.
Yeah, I remember the reports earlier about Russia saying that they were willing to accept Bitcoin as payment. But we've also, I think, just seen a bill finalized in Russia a piece of legislation that would recognize crypto as as legal tender in Russia. I guess in light of this, I suppose that increases the possibility of it being used as a sort of alternate payment mechanism that could be used for sanctions evasion. I don't know, Tung, Ola, Vincent, feel free to jump in if you have any thoughts on this.
Maybe I can just add on to what I said earlier. As you mentioned, as Russia faces more and more sanctions, the country is likely to try to use alternative payment mechanisms, including crypto, in order to generate funds to settle international payments for trade, despite its lack of access to SWIFT because of its ban, and of course the ban of its restrictions on dollar clearing through the US banking system as well. Nonetheless, I think it's useful to understand. I think Russia has a very complicated relationship with crypto prior to this crisis, because it has previously alternated between calls to ban it from the Bank of Russia, the central bank, and plans to regulate it from the Ministry of Finance. So therefore, while we might begin to see the Russian government consider using more crypto in various ways, it might not be so easy, nor might happen in the near future. I think in addition, there are also many other reasons limiting Russia's use of crypto to evade sanctions or as a form of alternative payment. Because aside from the issues of liquidity and accessibility that I was talking about earlier, it is also often challenging for crypto to be used for payments and certain transactions at mass scale, given the lack of widespread adoption and usage. I mean, it's very easy for you to have crypto, but whether you can use a crypto to buy food is a completely different matter. And then crypto is also highly volatile, and Russia might not want such volatility while trying to manage the stability of its currency. Crypto is actually also very transparent. If sanctioned Russian actors try to move large funds, like let's say in the billions of dollars through the blockchain, it will be easy for them to be tracked and monitored using blockchain analytics techniques that we use, for example, at Elliptic. So I think more importantly, sanction compliance is really not new to the crypto industry, as I believe my panelists will also attest. It's very much similar to the traditional financial institutions. The crypto industry is actually often regulated for AML/CFT obligations before other form of regulations. And there are existing RegTech solutions and best practices for sanctions compliance adopted by the crypto industry. So it is definitely not a given that Russia will be successful in using crypto as an alternative payment mechanism for sanctions evasion, even if it wants to, given the many defenses out there.
Maybe I'll add on to Tung on more traditional alternatives to SWIFT, because I think many people are wondering what does it mean to Russia, to Russian banks, to certain Russian banks to be cut off from SWIFT. Is there any alternative at all? There are certain alternatives. There is a Russian payment system. There is a Chinese payment system, and the work since I think 2018 or 19 to integrate both. But they have their limitations. They mostly operate locally. They basically can send the payment messages and the messages between banks, but not only they operate locally in Russia, the Russian system in Russia only. It also has a very small number of participating banks, mostly from Russia orbit of influences. So it's not as widely used as SWIFT. But well, more to come, right? If it's on the agenda between two countries, how to develop and evolve those systems, there is to a certain extent in which Russia could use it. But I want to make one point on. I wouldn't make the alternative payment systems. I wouldn't make a direct link to evasion, because the evasion happens mostly through SWIFT, through commonly known and used. SWIFT, even in recent OFAC designations and press releases, the evasions networks describe they involve cross-border transactions with countries that have nothing to do with Russia payment system or China payment system, involving Malta, France, United Kingdom. So we should not be probably over or underestimating the use of SWIFT in evasion and putting too much attention on alternatives to SWIFT, because their possibilities are relatively limited.
Yeah, maybe I can share a couple of thoughts on this, because I think you had I think it's very interesting to see that crypto comes up as a new technological innovation to make payments different and to make them more global, in the sense of being less dependent to individual states. And at the same time, you have like similar efforts by states themselves to build their own alternative payment mechanisms. And that, to one extent, I think they are. I mean, it's fair to say that to the extent that sanctions are economic weapons, you also have like kind of geopolitics of payments. And there are really two very important instruments for the US sanctions to have a significant reach. And those two elements are first the dominance of the US dollar as a reference currency in international commodity markets, and secondly, the second pillar is really the SWIFT network that's really underpinning the global banking relationships. And so, given the fact that certain countries have a hold on those two key pillars of international trade, it should not be a surprise to see that other countries are seeking ways to reduce their reliance on those two elements and basically reclaim a degree of sovereignty on their ability to conduct international payments or to freely trade. I think that there were some before the SWIFT ban was imposed earlier this year. In the press, you could see those comments that such option of cutting off Russian banks from SWIFT would be a nuclear option. And I think like it was a couple of years back, but you had some Russian officials stating that being cut off from SWIFT would be interpreted as an act of warfare. So we really have those considerations, right? And so one other comment though. Obviously, US adversaries or sanctions targets are going to seek ways to work around sanctions, as Ola was saying, through different ways. But it's not only the direct adversaries, actually. You also have an interesting situation. If you remember in 2018, when the US reimposed sanctions on Iran and imposed some Iranian banks to be cut off from SWIFT, the EU, which is not quite an enemy of the US, you would agree with me on that. The EU was not very happy with that decision and was trying to find ways to continue working with Iran. And so they had to come up with a payment mechanism. It was a kind of a barter of a facility to continue certain permissible commercial activities with Iran. So, well, the trend is clear. You have those attempts to build alternative payment mechanisms through crypto, through alternative payment systems, and to Tung's point, it remains to be seen whether you can achieve the right scale and the right reach for these payment mechanisms. One final comment here. I think it's fair to say that the US are very well aware that there are reactions to their far-reaching sanctions, and that there are those initiatives, and particularly crypto, on which it's hard for them to have reach. And so, kind of interestingly, these developments will probably have the effect of having the US use sanctions differently, maybe not as automatically as before, in a more reasonable and measured manner, and to really think through the side effects and the reasons for imposing sanctions. So, interesting to watch in the future.
Thanks for those comments. Ola, one of the things you were saying, so I'm kind of, was asking about alternative payment systems, but very interesting that you raise, that a lot of the evasion activity could just be happening through SWIFT. And it kind of speaks to the last panel that was on about, shell companies. If you don't know who's behind those shell companies, there's very little to kind of stop that evasion activity. Maybe Ola, if we could shift the conversation a little bit to maybe talk a little bit about the technology and data challenges related to sanctions compliance, given the more complex environment. How much more pronounced are these challenges, would you say?
I would say that more challenges related to data and technology come with detection of sanctions evasion, because the Russia sanctions, Russia designations hasn't changed much in the structure of controls, in the traditional screening and review of transactions. It's just a scale that is different. But detection of attempts of evasion is a little bit different topic, and it requires very well filtered and prepare data while we are operating on especially in the large banks, the large volume of data that is unfiltered, and we have to build those filters. We have to first define them. We have to understand what are we looking for, and then to be able on this large amount of data to find what we are looking for. Whether we want to look for shell companies or shell companies in high-risk jurisdiction, or we want to look for shell companies plus high-risk jurisdictions plus some Russia-related keyword. It's all to be defined internally by the banks, depending on the nature of their business and of their customer portfolio. But it's definitely a challenge to identify evasion, trying to filter out the large volume of data that is there, and we can use support from organizations, agencies, or companies that help in defining such typologies. Vincent advisory, for example, from quite a while ago, and all the outcome of this entire big exercise, and we have to define how frequently we want to do this, right? Whether we want to repeat this exercise, whether it should be ongoing. We have to put it together also with our daily controls, our BAU controls, our screening outcome of transactions, of customer screening, and even our customers' known exposure to Russia that does not raise any immediate sanction concern. If we look at this data holistically, I think we would be able to perhaps detect certain patterns, detect certain risks that should be addressed. But definitely the area of sanctions evasions and the need for detection is the challenge is there.
Vincent, I guess you're dealing with sort of a lot of these issues. When you talk to a lot of your clients, different banks and so on. Anything to add to that?
No, I couldn't agree more with what Ola was saying. You really have, Ola was talking about kind of advanced control to go beyond the official sanctions list and really not only look at the names, but really look at the patterns and the kind of transactional analysis to flag evasion patterns. So, but I think, like, roughly speaking, the types of challenge that we observe is really that, basically three levels of challenge within banks and corporations. You have first, broadly speaking, a data quality issue, and I think that's kind of to a point that was mentioned in the previous panel. You have imperfect data quality, even for the bank's internal data quality. The data may be stored in a variety of different sources. It may be structured differently. It may be not really available. So it's really difficult to have a central and well-harmonized view of your internal data. But not only that, when you are working for transaction screening, you're also relying on your counterparty's data, right? So you will receive message from a counterparty bank, and you don't know how good that data is going to be, and so potentially you will have to be working with incomplete or poorly structured or even sometimes meaningless data on the transaction message. So that creates operational burden to put things together, to get the additional detail, and to really make sense of what is coming through. So that's for the data bit. Second element of challenge, and quite evidently, it's really related to the tools themselves, and how do you adequately have the tools configured, right? It has been made abundantly clear by the regulators that you need to have fuzziness. You need to be able to spot partial correspondences, and exact matching is not an option when you are matching names, right? So, but then the issue becomes how do you strike the right balance as to not generating massive amounts of hits and with a stack of alerts that is impossible to process, right? So that's really taking significant expertise, time, and efforts by the compliance teams to really strike that right balance and maintain it over time. Like, monitor that it's actually the right balance and maintain it over time. And finally, the third level of challenge is really the nature of the sanctions regulations themselves. You have list of names, that's right. You have list of designated entities. But you also have sanctions regulation that expands beyond those officially listed entities. right? So the well-known 50% rule in the US, for example. So even if you have a single listed entity on the official list, that may result in the necessity to spot potentially thousands of subsidiaries located everywhere, and that's really a significant challenge to to have that comprehensive view of those implicitly sanctioned entities.
Thank you.
If I could also add, sorry, Manesh, just to what Vincent said, the very important point on regulations themselves and the expectations from regulators from financial institutions, right? The 50% rule is, I would say, from my experience, probably the easiest rule. If we compare it to other regulators that go beyond and expect the banks to detect any exposure, direct or indirect, operating on behalf, under control, this is technically extremely difficult to detect. But this is the expectation. This is kind of a reporting that the banks have to complete on a regular basis. So there's a huge effort also on that side for internal intelligence to trying to strike a balance that Vincent mentioned, but also to satisfy the certain regulations. And I'm speaking here mostly about Singapore regulations, which are very conservative, and not only following the letter of regulations, but also trying to follow the spirit of those regulations, the spirit of those prohibitions. The banks also want to by the definition of its program, trying to do the right thing and detect the risk that the regulators are expecting us to do. But that there's a huge work behind the scenes, and this balance that Vincent mentioned is very, very important to be able to continue operating.
Yeah, that's really interesting. In the past, I guess, before this particular crisis, I've often heard that the 50% rule being referred to as something that added complexity. But I suppose now, given the expectations from various regulators to detect any exposure, that seems to be something that introduces a bit more clarity for banks. So thank you for sharing that. Maybe Tung Lee, just want to kind of ask what your view is from the crypto sector, whether, so Ola and Vincent have been kind enough to share with us some of the challenges they're seeing, whether it's to do with controls, data quality, the false positives, and so on. Are you seeing sort of the same challenges in the crypto sector, or are there other issues that you need to kind of pay attention to as well?
Yeah, so actually in many ways, I think the challenges raised by both Ola and Vincent, be it in terms of data, in terms of regulatory expectations, so on, all these challenges, I think in relation to sanctions compliance, remain very much the same for the crypto industry. I think, but there has, however, one key difference, which is that the blockchain is highly transparent and is just not designed for the processing of large sums of money anonymously. So this is due to the immutable and public nature of transactions on the blockchain. And then there's also a growing use of sophisticated monitoring tools. So therefore, the options for sanctions evasion using crypto, especially if large amounts are involved, are actually quite limited, as their movements through the blockchain are highly traceable. That said, I think a common misperception I have seen among policymakers is actually that the crypto industry is especially vulnerable to sanctions evasion as compared to traditional financial services. So, of course, I have mentioned previously problematic areas such as non-compliant or even complicit crypto exchanges. However, I believe these bad players are actually in the minority. So, for example, if you look at the various countries that have imposed sanctions, as mentioned by Vincent, for example, US, UK, EU, the crypto industry is actually highly regulated, and sanctions compliance is already at a high standard, very much similar to banks. Furthermore, most of these regulators have made clear that sanctions apply to crypto services and transactions. So given the technology underpinning the blockchain, there's really no reason why crypto players cannot comply with sanctions. And in fact, a lot of them have already implemented highly effective RegTech solutions using, for example, blockchain analytics. So if you look at blockchain analytics specifically, there are three main ways that such solutions can help companies, be it financial institutions or even virtual asset service providers, to ensure that they're able to identify potential Russian sanctions evasion. So the first is actually wallet screening capabilities that allow a VASP or virtual asset service provider to identify sanctioned wallets and block any attempted transfers or withdrawals to them. This is actually a basic capability that most regulated crypto exchanges already possess. So given the dynamic nature of the situation, it is of course important that such wallet screening tools remain up to date with the latest sanctions imposed on new entities or existing ones. And then aside from pre-transaction screening, blockchain analytics can be used for post-transaction monitoring. So it is essential for VASP to be able to identify subtle and ongoing transactional indicators, again, very much similar to what Ola has explained, okay, that suggests sanctions evasion may be happening. Due to a transparency and traceability of transactions on the blockchain, once funds start moving, it is very possible to follow the funds to determine if the customer is either receiving or sending crypto to sanctioned wallets and actors. In many cases, for crypto exchange, transaction monitoring is actually far easier and can be conducted in a more comprehensive manner as compared to a bank. So for example, some red flags that can be readily observed on the blockchain include the use of mixers, privacy coins, and other obfuscating services, complex transfers through multiple wallets known as chain peeling, and then of course transfers to entities based in high-risk jurisdictions. So therefore, by using blockchain analytics, such companies can actually determine to a high degree of accuracy whether suspicious transactions are occurring, and of course also gain insights that can help them mitigate sanctions evasion risk. I think the last way that blockchain analytics solutions can help is to enable the screening of potential counterparty risks. Again, something that Vincent also mentioned. So in this case, it is for a VASP to screen potential partners and other counterparty VASP to check if they have a nexus to Russia. And if so, they would be considered high risk because of the many Russian entities and individuals that are facing sanctions currently. So solutions for such counterparty due diligence will also contain profiles on the VASP, such as information with like their location, whether they offer trading in rubles, that means like a ruble Bitcoin swap, for example, the sufficiency of their AML CFT controls, and then also their transactional histories with sanctioned entities. So at Elliptic, we have identified more than 430 exchanges with a nexus to Russia and Belarus to help our clients comply with sanctions. And such solutions are also critical for traditional FIs or traditional financial institutions because they also help to manage their indirect sanctions exposure as crypto becomes more mainstream and a bank clients or customers may start transacting with potentially high-risk exchanges.
That's interesting. I get the sense that sort of crypto is vulnerable, but only because of the exchanges that might not be fully complying with what they should be, and I guess that's kind of something that's changing over time. I guess Ola, maybe a question for you from a bank's perspective. Would banks be a bit more sensitive about crypto businesses? I mean, in terms of providing services to crypto exchanges, would you be sort of assessing the controls they have in place when deciding whether to offer them, services from a bank?
I usually smile when I hear the question working from the bank about cryptocurrencies, because the nature by itself, the cryptocurrencies exchanges and virtual currencies is not to be a bank, right? But to answer your question, I think I will just comment on what Tung said a few moments ago about a misconception that the cryptocurrency is a high risk. It can be used and abused for evasion, and it's very challenging to detect any illicit activity. May it be sanctions, may be any other activity. Whether the banks are concerned, I would say less and less so. The more we learn, we as a banks, the more we learn about this industry, about the systems, about possibilities of control, detection, the less worried we are. I think it's a very natural progress, right? At the beginning, the natural reaction is completely new. It's unknown. It's anonymous. We don't want to do this because we have to identify the customer source of funds and etc. and etc. But how would we treat currency exchanges? We would treat them as any other client, probably. So we would like to know anything that we have to know about them according to our KYC policy and procedures, our risk appetites. We would like to identify what do they do, not only as what kind of entity it is, but what are what is their business. What are the business activities, right? Because those business activities introduce the risk to us as well. So we would like to know, and what kind of, if this is a high risk business, then what kind of controls those cryptocurrencies have. And I think Tung's explanation was very helpful, at least for me, and reassuring that there are mechanisms that they are developing quite advanced for tracing, to identifying each transaction. The question is only probably, to what extent the currency exchanges implement those controls, right? But this is our role as a bank, if we want to onboard this kind of company, to understand whether this kind of solutions are used, and whether they are regulatorily monitored, what is their effectiveness. And for that, back to my initial point, we have to understand what does it mean, effectiveness of such controls, right? Because this is not traditionally something that bankers would understand, even more specialized in financial crimes, although probably drawing certain parallels would help. So thank you for explaining that. That was very helpful.
I think we have about 10 minutes left. I would like to touch on a few final themes. For example, I mean, Tung Li, earlier you mentioned the OFAC actions against Suex and Shatex. I kind of wanted to ask the panel, the OFAC sanctions, we've seen action against crypto exchanges, wallet addresses, and also obviously a lot of other action taken in the past for sanctions breaches. Anybody wanted to kind of share with our listeners, what are some of what's the significance of OFAC's actions? What lessons should be taking from them?
So maybe I can jump in first, talking about crypto and so on. So I think as background, OFAC has actually listed crypto addresses on its specially designated nationals and block persons list since 2018. So with more than 100 belonging to a variety of sanctioned actors, including cyber criminals from Russia and North Korea, as well as complicit exchanges like Suex and Shatex. So as you mentioned, OFAC recently added 3 new addresses belonging to the North Korean hacker syndicate. This is actually called the Lazarus Group. And this group is believed to be behind the Ronin Bridge hack in late March that resulted in the loss of over $600 million in crypto by Axie Infinity, a crypto gaming company. So with the Russian invasion of Ukraine, I think we have begun to see more actions taken by OFAC targeting such Russia-linked entities. So for example, a month ago, OFAC added 120 addresses to its SDN list associated with Hydra, the darknet marketplace that I mentioned earlier, and then Garantex exchange as well, which is an Estonian exchange that helped Russian ransomware gangs and other illicit actors launder huge amounts of money. And then just a week ago, and for the first time ever, which is why this is really quite significant, OFAC designated the Switzerland-based holding company of a crypto mining firm, BitRiver, which was founded in Russia in 2017, and also 10 of its Russia-based subsidiaries that are controlled or acting on its behalf. So in its press release, OFAC stated quite a few interesting things. So for example, it stated that it is taking action against Russia's crypto mining industry because crypto miners help Russia monetize its natural resources. He also said that the US is committed to ensuring that no asset, no matter how complex, becomes a mechanism for Russia to offset the impact of sanctions. So all these recent actions by OFAC, so against these 3 techniques which I mentioned earlier, crypto miners, cyber criminals, non-compliant exchanges, are clearly significant because I think first, of course, they validate the analysis that these 3 techniques are likely those that's going to be used by sanctioned actors, including Russia. Second, they are a clear shot across the bow for crypto businesses operating in or for Russian illicit actors. And then third, it's quite clear also that authorities are becoming more au fait with sanctions evasion typologies using crypto, and their scrutiny of the crypto industry will only increase going forward. So therefore, it's critical for crypto businesses to implement robust controls, for example, like the travel rule, and as well as RegTech solutions to ensure sanctions compliance.
Yeah, Maybe I can continue on what Tung was saying, and I think you perfectly explained the recent focus on crypto activities. And one interesting document that was published just last year was by OFAC. It was a general guidance on the crypto compliance. So it's really key to see a range of evidence that crypto is really at the core of US regulatory concerns. But more broadly, I think there is also an increasing and great momentum around, like, broadly speaking, digital services. In the past couple of years, I'm talking about the enforcement decision issued by OFAC. In the last couple of years, we've seen various settlements being reached with digital platforms, companies providing software or basically conducting digital activities. And basically the message is clear: is that company active in the digital space are expected to comply with sanctions as well, much like any physical or brick and mortar business. And one of the common takeaways from those enforcement actions was insisting on the implementation of IP blocking controls, and really having in place preventative measures to block access to the digital services for individuals located in comprehensively sanctioned jurisdictions. So countries such as Syria, Iran, or North Korea should be blocked from accessing such digital services. So, I mean, you could always argue that those controls are far from perfect. You can always obfuscate your IP, but still, I mean, it's for companies being active in the digital space, it's a bare minimum, and you should really have those measures in place, which are, by the way, interesting because you are really preventing sanctionable activities to take place. You don't need to detect the actual transaction or an actual business relationship. You are just blocking the possibility of that violation to occur. But so that's for the recent focus on digital trade, but I think it should not make us forget about the continuing importance of sanctions compliance in the physical world. And we continue to see those frequent enforcement decisions by OFAC targeting actual companies active in the physical trade. There was a settlement issued just 3 days ago by OFAC, which was actually in the excess of $6 million, I believe. And that was targeting a freight forwarder, so really a company facilitating international shipping activities. It's been the largest settlement so far in 2022, and that company allegedly violated sanctions 3,000 times, and that is what gave rise to the settlement. So digital is high in the agenda, but yeah, physical trade remains a significant concern as well.
Yeah, I was hoping we would have a bit of time to talk about trade as well, given the the export controls that have been imposed. Alumina from Australia, electronics from Taiwan, dual-use goods, luxury goods, and so on. Maybe we can just spend a couple of minutes. I'd like to ask you, Ola, and maybe Vincent, you'll have something to add. How are banks sort of dealing with these type of trade restrictions, for example, in trade finance activities?
We would have needed a full panel for that. That would have taken a full hour, Manesh.
That's right. Well, there is another challenge, right? Because the lists of dual-use goods are specific to particular jurisdictions or even organizations. They are not consistent across the geographies that we operate. Some countries do not publish such lists. Some countries publish such lists. And another challenge is that such lists of dual-use goods cannot be treated the same as sanctions lists, right? So it's not as easy as put the list of dual-use goods into screening filters and see what happens, because disaster would happen, right? Operational disaster would happen probably. So there has to be certain either risk-based decision, continuous dialogue with regulators. What is a really high risk? What is really expected? And the focus is obviously on trade, right? Of course, dual-use goods, trading of dual-use goods is not only related to trade transactions. It may be as well related to simple payments. But detecting of this kind of risks would be very difficult for the bank. So there has to be certain, again, filtering and consistency of data and the common approach, preferably by entire industry, together with the regulations, decision made together with regulators in particular jurisdictions on what is the high risk, what are high risk points on that list, and what the banks really can do, what is feasible to produce some meaningful outcome, rather than just implementing controls just for the sake of implementing and producing more operational work that doesn't help anybody and doesn't produce anything useful for anybody.
Vincent, do you want to just give a final word? I know that trade compliance is a big focus for you guys over there.
Absolutely, and we completely echo the challenges that Ola was raising. It's really complicated for international firms to have the meaningful data set to use for screening and to know exactly where to look in their internal data, at what points they need to conduct the screening, up to what points do they need to go, because you have those notions of who is the end user, what is the end use, to account for all of the geographies that are involved in an international trade transaction. So you really have a variety of factors and of data points that you need to consider when implementing those trade sanctions. So it's really an area of challenge in itself. So yeah, and also just one final thing here, but we're talking about Russian sanctions. Russian sanctions do not only apply for dual-use goods or other defense items, for which you have indeed, as I was saying, or at least for some jurisdiction, you have lists maintained at the national, and also you have some international lists, but that are not legally binding. So lists such as the VASNA arrangement are a list of dual-use items, but they are not actually binding everywhere, right? But beyond those types of items, the trade sanctions being applied against Russia target also some more harmless goods, right? We have bans on the luxury items, as well as other energy product and different items that are not typically captured in a single universally accepted list. So yeah, that's another level of challenge here.
Thank you so much, and I guess it speaks to kind of where we started off, just kind of the increased complexity of the landscape. So we'll have to end it there. I wish we had a bit more time to talk about this, but I do want to thank each of you. Tung, Ola, Vincent, thank you so much for your time today and for joining what is the very last session of the day and the event. I appreciate your time. For our closing remarks, I'd like to pass the stage over to Nick Wakefield and Brad McLean, our two co-founders here at Regulation Asia. Thanks once again, Vincent, Ola, Tung. Have a good evening.
Thanks, everyone. Have a good day. Cheers.
Yep, bye.